Hi, welcome back to the Seller Finance Center. I want to talk to you today about the power of appreciation, and specifically the appreciation you can gain through home ownership. For those of you that just rent today or have not pursued home ownership for any certain reason, I want you to understand just how much wealth you can create through owning a home and through the appreciation you get through owning a home, and how seller financing can be one of the strategies you use to achieve that objective. So what I want to cover today is a quick summary of the differences between owning and renting, and how owning a home gives you this opportunity to capture appreciation. I'll give a quick summary of what appreciation is, if it's something you're not quite comfortable with as a concept. And then I want to give you a very specific appreciation example to show you just how much wealth you can create using appreciation. There are some very specific differences between buying versus renting. And a lot of them are around the expenses and what it costs you to own a house or what it costs you to rent a house. But what I really want to focus on are some of the differences that are covered in the benefit section. Specifically, equity. Equity is just a term that means how much of the house do you own outright versus how much might be still owed from a loan or a mortgage perspective. And you gain equity through two mechanisms or vehicles. One is appreciation. Appreciation, again, is how does the value of the house increase over time? And principal paydown is how much equity do you gain as you pay down the loan. So if you have a $200,000 house and you have a $150,000 loan outstanding, you have $50,000 in equity. If you've paid that same loan down to $100,000, then you have $100,000 in equity. So that's kind of the concept of principal paydown. So I want to really focus us on this equity area, and then we'll do a drill down on appreciation specifically. So a very simple definition of appreciation. Real estate appreciation means the increase in the value of the property over a period of time due to a couple of drivers. One is supply and demand. Whenever you're in a neighborhood where the demand for houses is higher than the supply of houses, your home is going to appreciate because there's more people who want the homes, and homes are available, and they will bid up. They will pay a little bit more for the home each year, new buyers, because that's where they want to live. So supply and demand can help drive appreciation. The second item is inflation. So if we're in an inflationary economic period, which means things just tend to cost more each year, that's going to drive up the value of your house. And lastly, location. Whenever people talk about real estate, they talk about location, location, location. So if you're in a location that is gaining value, and that often happens particularly in the inner city, it can happen where there's good schools, it can happen where there's a lot of business, so people want to live there so they can get to their place of business. So location can drive appreciation of real estate. On this slide, I've grabbed a few different charts. They all talk about how in the United States, how real estate prices have regularly increased since 1968. The top left table shows median prices for homes, and you can see that very steady climb since 1968 through 2004. Similarly, on the bottom left, that shows it from a percent growth perspective, and with the exception of 1 year in the late 80s, which was a housing crisis, you can see, again, very steady 5% generally or above real estate appreciation rates in the United States. On the right, you see some scenarios from Zillow, and from the optimistic to the pessimistic, and you could say the average for 2018 is something on the order of like 18%. So in summary, on average in the United States, when you buy a home, it almost always appreciates. And so your odds of getting appreciation if you buy a home are quite high. If you're thoughtful about it and you pick your neighborhoods well, it'll be almost guaranteed. So let's look at a very specific example of how you can generate wealth through the appreciation of your home. The example we're going to use is a home that cost $150,000 when you purchased it, and an assumption of a 5% annual appreciation rate. The first chart shows the value and the appreciation of your home over a 10-year, 20-year, and 30-year period based on those two assumptions. Again, $150,000 home price, that's what you paid for the home, and a 5% annual appreciation rate. You can see how the value of the home increases significantly over 10 years, 20 years, and 30 years. And the appreciation component of that value, right? So you can see, even though you spent only $150,000 on that home, and the home was worth $150,000, after 10 years, you've created $94,000 of appreciation or value or wealth for you, because you capture all that. After 30 years, you effectively capture $500,000 of appreciation on a home that you purchased for $150,000. There's not a lot of other places where you can get that kind of financial return on an investment, particularly a leveraged investment. And by leveraged investment, I mean because you're buying it with a loan. You may only have paid $20K out of your pocket and the balance you borrowed, okay? And so there's not a lot of ways to get that kind of return with a cash investment, let alone a leveraged investment. Now, the other place you create wealth isn't really appreciation, but let's talk about it, is the principal pay down, okay? Because like I said, if you're doing this with seller financing, you're likely buying the home with leverage. And leverage is just another term for a loan or a mortgage. And so you can also see on the bottom the equity or wealth you're creating through the principal pay down. When you've bought the home for $150,000, you only have $20,000 of equity. That's your down payment. The loan is not your equity yet, right? You still have to pay that loan off. So the bottom chart shows after 10 years, 20 years, and 30 years, how much is left of the loan and how much principal you've paid down just through those regular monthly payments you're making, those regular monthly mortgage payments. And so obviously after 30 years, the loan balance is zero. So you've paid down the full balance of the loan. And so you've created $130,000 of value through the principal pay down. Now that's captured in that home value. To come up with your equity, you basically subtract the home value at any time minus the loan balance at any time, right? So your equity after 10 years is the $244,000 minus the $109,000. But after 30 years, basically equity equals appreciation, plus the initial home value. Okay, so hopefully these begin to give you an idea about why I'm a big believer in purchasing real estate and creating long-term wealth through real estate because of this powerful multiplier of appreciation. So key takeaways from this quick video. 1, appreciation is not available to you as a renter. That's one of my big things about renting. And I'll tell you a story. I was close to being 40 years old before I owned my first home. And it's one of the few things from a financial perspective I kicked myself for. I rented for a long time. I got married late. I rented for a long time. Just never wanted to buy that home. I was always thinking I was going to move or something else. And it's one of the few financial decisions I've made that I kick myself for. Appreciation is not available to you as a renter. So I'm a big believer in, even if it's a small starter home, go own a home as soon as you're fiscally able. Homes in the U.S. have shown fairly consistent appreciation over time. Again, if you pick wisely from a neighborhood perspective, you're almost assured 5% or better appreciation. You can create significant long-term wealth through real estate appreciation. Hopefully that example showed you just how powerful that can be. And we actually have a model. If you purchase one of our classes, we have a wealth generation model that you can use to estimate for yourself what kind of wealth you personally can create based on the homes you target. And lastly, For many of you that want to buy a home but can't because maybe you can't qualify for a mortgage or there's some other blocker, seller financing might be the solution to owning a home for you. And that's why we created the Seller Finance Center, and that's why we've created some of the curriculums we've created, is because I believe so strongly in the power of owning a home, not just for the financial benefits, but also from just the personal benefits of having a place you can call your own. Okay, so I hope this was helpful, and we hope to see you back at the Seller Finance Center soon.